My mouth and start this session properly now. So we have got 6 presenters and one special guest who's going to come up and join us now. He's always educational. He's always entertaining. Actually, your colleagues have told me this year that you're a very entertaining dinner guest, which would explain why it's always good fun listening to your presentations. We're going to talk about gold. So we're going to give you an overview of gold in 2023 and beyond. And I had an interesting conversation with a fellow some of you may follow. His name is Rick Raw, comes out of America, and he's very big on gold as the one thing to hedge your bets and look after your investment portfolio. And if while you're listening to our talk this morning from ABC Refinery, I didn't realize last year there was actually a multitude of gold bars outside. And I met on the way in today Steve and Ben. If you don't know who Steve and Ben are, they're two rather well-positioned security guards that are outside. And usually when I go to the ABC Refinery booth, it's because they've got fabulous gold bar chocolates. And that was all I was focused on last year. But this year I was in there early enough to meet Steve and Ben, who were taking up the position and setting out their security and their surveillance reconnaissance mission. And then informed me that they've got a couple of $1 million gold bars just sitting out there as you go in the door. So if you'd like to go and have your photograph taken with that and discuss more with the dinner party man here, don't panic. I am going to give you another minute up your sleeve. It's all right. A little bit more about gold and the prospects of gold. Feel free. And when you hashtag it, make sure you get that hashtag that is just down the bottom of the screen there, RIU Sydney 2023, and show everyone yourself with your $1 million gold bars, and if you talk nicely to Steve and Ben, you might let it take it out and are you allowed to touch the gold bar? Really? Oh, fabulous. Okay, we'll do that. All right. Who is this man up the front? If you've never had the pleasure of meeting him or having him at your dinner party or listened to him talking about gold, he is a learned student of economics and his name is Nicholas Frappell. Please make him very welcome, everyone.
Thank you very much, Chrissy. And thank you for the opportunity to speak here today. We've rehearsed the drivers of the gold price many times at previous RIUs, and I'll reiterate that they are real rates, the dollar, broad dollar, to some extent crude prices and rising US debt. But today, primarily, I want to talk about the main macro themes for gold that are likely to dominate the 2023. They're already dominating 2023. They should go into 2024 as well, set the tone for 2024. And those are banking sector stress, official sector gold buying, the US debt ceiling, and Japan's exit from yield curve control. So gold has rallied quite sharply, partly as a consequence of the dollar weakness. And if we look at the effect of real rates, I'm just going to quickly pass over real rates, their nominal bond yields, less inflation expectations. They're traditionally considered the biggest driver of gold prices, but they've been less informative lately. They've been rallied, gone higher, and then traded sideways, whereas gold has sort of confounded that price behavior and gone up by about 25%. And I suspect this is because of official sector gold demand, which was about a quarter of all gold demand last year. But then quickly move on to a broad view of the US dollar. Expect US dollar weakness to be a theme of 2023 and into 2024. Now, when we spoke about the dollar index in great detail about 2 years ago, I think I mentioned that there was a likely peak in the dollar index expected in Q4 of last year. And that came to pass. And subsequently, the dollar has been on a sort of a downward trajectory. I expect the dollar to carry on that downward trajectory to get to about 94. We're resting on some trendline support at the moment, but 94, 96 in the early part of next year is where I expect the dollar to go. And just as a reminder, that's the dollar index, the DXY, because it sort of captures the major trading counterparts that the dollar has. Now, it could be said that the economic data for the US is running pretty strong at the moment and keeps surprising us on the upside to some degree, so that all the expectations of aggressive rate cutting by the Fed might be proven wrong. But nonetheless, at least 2 reasons for anticipating dollar weakness. One is that the US might be the first out of the rate rising cycle, the rate hiking cycle, if not rate cutting cycle. And then at the same time, these sort of 39-month cycle that I referred to that has driven the dollar sort of up and then slowly down. Looking at how gold positioning has reflected sort of shifting tones in the markets, including some of the macro themes that I'm going to address. At the very beginning of this year, gold positioning was relatively high because people thought that higher rates for longer had gone away as an issue, but then a run of hot data in the US disabused them of that view. And at one point, there was some talk about federal funds going to even 6%. But very shortly after that, we all started to hear about Silicon Valley Bank, which was closed down the 10th of March. And then shortly after, Credit Suisse, which was resolved by the Swiss regulator, folded into UBS to create a mega bank that is twice the size, in balance sheet terms, twice the size of the Swiss economy, which is a thing in itself. As all of this sort of bank bad news happened, the dollar declined, and investors, mindful of risk, started piling heavily into gold, which you can see from the red bars in the sort of net positioning. Now, what does bank stress really mean for gold? There's a couple of different ways of looking at it. One way is that the liquidity provision that the Fed is providing in order to sort of shore up banks or help the banking system overall is another form of quantitative easing, where you can pledge eligible securities to the Fed at their par value. They might be worth 50% of par, but the Fed will recognize them as par valued, and they will lend you money at extremely generous terms. That is a form of liquidity provision that I believe is probably favorable to gold. On the other hand, banks themselves are, and I'll show you a sort of little bit of evidence for this, banks themselves, as they scramble to get keep and retain deposits and be more careful about to whom they're lending and how they're lending, that will tighten financial conditions, which is slightly different from tightening monetary conditions or easing monetary conditions. That is how the banks actually sort of lend money into the real economy. And that tightening of monetary conditions, financial conditions, basically contains the seeds of an economic slowdown if it goes sort of too far. And that too, in the sense that it can damage the prices of other assets, can be positive for gold, gold being either uncorrelated or negatively correlated to many of those other assets. So just as a measure on the left-hand side chart shows you in about the space of 8 or 9 weeks, $81 billion of the Fed's new term bank lending facility was utilized as an effort to kind of shore up, provide support to the particularly medium-sized banks in America. The right-hand side box shows you when the Fed asks senior loan officers at banks, what's your view on lending? As the angle goes higher, that is telling you they're less willing to lend. In effect, the financial conditions are tightening. Now, that last data point is taken in March, and you can only assume that things have got worse since then, because the banking system has only come under more sustained pressure. And so I would imagine that senior loan officers are even less likely to be mindful extending credit. So at this point, you could be looking at the setup for a sort of economic contraction, which I would say that on balance is good for gold. Now, moving on to the second macro theme, which is central bank gold purchases. Last year, 1,136 metric tons of gold was purchased by the official sector. January and February of this year, about 158 tons, which is a fairly good start to the year. I think March contained some selling from the Central Bank of Turkey. I put this red line here to show you the reals, the real yields, and you can see where sort of real yields, despite being very high, the official sector sort of ignored that and bought an absolute ton of gold. So that's why the real yields are sort of perhaps less of a guide as to what the gold price should be doing at the moment. I won't go into great detail about why the official sector buys gold. There's a lot of things you can say about it, but I will say just two things, which is firstly, they're not too dissimilar to us, perhaps. One thing is that you're looking at an asset which has no counterparty risk, which is in today's world a positive. The second thing, which I think is really profoundly important, is all about portfolio allocation. Official sector reserves have risen hugely in the last 3 decades. They've gone up about 10 times. And if you think about official sector reserves, the primary thing, the first objective is to have, if you like, precautionary holdings, insurance holdings, which are always going to be largely in the US dollar. But once you get above those precautionary holdings, then you start to actually need to diversify, because if you think of the first part of your holdings as insurance, then you don't want to overpay on insurance, and there's a rational reason to diversify. Gold has very good diversification benefits, so you can see why the official sector would, especially those actors who are already holders of gold, why they would want to increase their holdings. However, some people, and the narrative is, quite easy to follow here. Many people think that, well, the official sector is buying more gold, so that equates to some kind of wholesale rejection of the dollar. And I know that's really simplistic sounding, but I've heard that sort of said or tweeted or muttered about, and it's just not true in the slightest. Because if you look at the left-hand side to you box, the black bars reflect US dollar securities buying by the official sector, and the little yellow ones reflect how much gold they're buying. So the official sector, this is not about rejecting the dollar. This is just about diversification. Interestingly, if I just point out the two guys which differ, Egypt and Turkey, they've actually bought more gold than US dollars. They are not the poster children for sound economic policy choices that you think they are. So again, is very much about acquiring dollars and gold. The right-hand chart is a little bit more complicated looking, but effectively it talks about how many US agency debt that foreign holders, largely central banks, are acquiring. They're hungry for that too. And although it's still US dollar denominated, it's also part of a portfolio diversification play. And you can see huge amounts of money going into US agencies. Monetary policy settings, I'll quickly whiz through this. Rates tightened much further and faster than perhaps anyone really expected. The only question I'll ask is, are they tight or are they not tight? Now, if you look at a lot of central banks, they actually use a fairly mechanistic rule to help them determine where their rate setting should be. It's called the Taylor rule. It's not the only thing they do. So any central bankers in the room, no need to put up your hand and say you're being a bit simplistic. I know I'm being simplistic, but it is nonetheless a good guide. Are those rates accommodative or are they not? They're accommodative, because the suggestions of the mechanistic Taylor rule for both America, and I could go for other countries too, but obviously America and Australia, I think the two that we're most interested in, the gap for the RBA is about 9%. It's unthinkably huge, but it does tell you that actually the RBA is not quite as tight, by this measure at least, as the sort of ordinary householder might think they are. Market-based expectations of policy rates in the US and Australia, of course, have massively changed as a consequence of sort of post-Silicon Valley Bank and so on. The RBA, they've come back somewhat. They've not gone down quite, but in America, the expected pathway is still much lower. My only comment here is also expectations are built into that of cuts, and that is very much up for debate. Now, moving on to the US debt ceiling. It's obviously, it's here and now. The impact of the debt ceiling, or the possibility of the wheels coming off, is less than a month away from today. What are the impacts of the US debt ceiling? Well, the actual idea that the US might default is not impossible, but it is sort of unthinkable. The Fed is doing an awful lot to try and sort of manage that process, manage the process around which they provide liquidity and so on. But usually, if I can sum up what a debt ceiling crisis means, is that even if it's resolved and worked through, what you end up with is market volatility, certain degree of fear, and you get a lower nominal rates, and probably almost certainly a contraction in growth afterwards. And generally speaking, I would take that as positive for gold vis-a-vis other assets. The last macro theme that I want to raise is Bank of Japan, which has been managing as what's called a yield curve control strategy for many years now. As inflation, which is sort of feeding into higher wage settlements, develops, the Bank of Japan is less likely to be able to manage this yield curve control. There has been fear of it leaving even sort of within the next month or two. The new governor of the Bank of Japan, Ueda, is doing a fantastic job of holding that date back, partly because he does not want this to disrupt domestic banking, raise domestic banking issues within Japan. He's also mindful probably of the timing around the debt ceiling as well. Now, it's probably good for gold because I imagine it'll be good for the yen. Yen and gold don't always move together, but they seem to be at the moment, and it'll be generally dollar negative. So where does this leave in summary in the last sort of minute or so? Well, the big number in gold, in US dollar gold, is 2075. I think everyone who looks at charts or looks at the history of gold in the last few years will realize we have to get through that level to really make progress. But I would say there's through to 2075, then the next targets extend up to 2100 and 2500 in US dollar terms. The different things that I've all mentioned today, if you look at them all in totality, all contain benefits for gold, whether it is market disruption, anxiety over the valuation of other assets, or potential impacts on US growth. So the outlook for gold, it's not surprising that we're over 2,000 US dollars, around 3,000 Aussie dollars today. There is plenty more contained in those four thematics that I mentioned that has the potential to drive gold significantly higher. Thanks very much indeed.
Nick, just before you leave the stage, how much would that gold bar out there be worth at this time next year then? What's your prediction?
Well, if we hit 2,500 bucks, then you're looking more at sort of the 1.2, so say $2 million plus level. You asked me to do arithmetic on the stage. That's
you're an economist. What do you think? Oh, wait, is there I don't actually have time for questions, but go on.
Look, I'm not going to pretend to know a lot about crypto, but I think that since you've asked, and if I can answer,
my bad. Yeah.
You know, the valuation schematic for crypto is, I think, a little bit shaky. There will always be people who want to buy them, but I think look at the price behaviors. Look at two things. Look at the price behavior of crypto in the last 2 years.
Do you want, Nick? Leave it there.
And
if you'd like to go and have a chat with him, you can discuss that one further, because we're supposed to be resources, but you're right. He's the right man to ask in the right place. I've got Musgraves is coming up on stage. And while he is, can I just draw everyone's attention while I've got such a packed room up on the screen? Well, can we throw that flag up? We can't. All right, we've got a live poll going at the moment, and I asked people in the room to click on a QR code that we have, and we'll pop that up as the day goes on. And we've got questions going throughout the conference, and we'd like your input into that, and Eurus would like your input into that as well. So just a reminder to get involved in that one. Right, this fellow here. Name, Rob Waugh. Title, MD. Company, Musgrave Minerals. He is a geologist and an explorer, and he comes from a proud family of geologists and explorers. His mother graduated back in the 60s. She was one of the first female geos to graduate. Then himself. And now, and that's a late addition over there, you're just telling me that I'm doing my job incorrectly today, or not to the best of my ability. 1, only resources questions. 2, please put your phones onto silent if you can. Otherwise, I'll get in big trouble. So back to Rob. So his daughter has just graduated as a geologist from UWA as well. Would you put your hands together for him? That's an impressive little lineage that he's got going there. And he's here today to talk to us about a project up in Kew in Western Australia in WA's Murchison District. Would you please make him very welcome today, everyone?
Thanks, Chrissy. Thanks to Stu and Jax for putting on a great conference again. Kew Gold project. So we've just completed our stage 1 pre-feasibility. We based it on 2,600 gold. Obviously, spot price is roughly around 3,000 gold at the moment. So generates great cash, fantastic payback period, very short, 9 months, and great EBITDA at $530 million. Share price, we've seen an improvement with the gold price over the last 4 weeks. We're hoping that continues. We've got great news flow coming forward, leading into a stage 2 PFS and a mineral resource update. So board and management, board's been together for a while. The Kew Gold project, halfway between Mount Magnet and Meekatharra. Recently added Anthony Buckingham to our team. Anthony is here with us as well today in the booth, along with John and Graham. So please come to booth 33 and ask any questions you might like after the presentation. We're in a strategically important area. So we've got multiple producers around us. There are operating gold mines within 40 kilometres of us, both north and south, and a number of gold mines that are larger on care and maintenance in the district as well. So lots of rock processing opportunities. We're heading down the standalone path. We think we've got a great project. We've shown this through the stage 1 PFS that it makes great returns on investment. And we've got lots of upside on the exploration side. Just briefly take you through a 3D model. So we can see here, producers to the south and north of us with Westgold and Ramelius. We're in the centre. Ramelius are also moving dirt from the Penny mine all the way up here into the mill, which is 140 kilometres away. So we're central to that, only 40 kilometres from those existing mills. Our existing resource base. So we're focusing our PFS on this component of the resource. 417,000 ounces of indicated. We're continuing to convert our inferred to indicated, and that'll lead into a stage 2 of our PFS. Our central zone, Lena, Break of Day, White Heat, is the mainstay of this potential project moving forward. The stage 1 PFS looks at open cut designs at White Heat, Break of Day, and Lena. And within that, we've got a small underground at Break of Day as well. And you can see some of the grades there. In particular, you've got 14 metres of 190 grams from about 12 metres below surface. So very close to surface, these are very high grade deposits. And this is leading to a really good payback period. Again, some of the mineralisation, fairly typical of this district. You can see some of the quartz veining within a basalt host, but again, very high grade. You're looking here at 5.5 metres over at 12 grams per tonne, sitting in the underground at 250 metres below surface. Again, looking at 3D, the White Heat deposit, some great mineralisation there, fantastic results. Tens of metres at over 100 grams. We've been able to identify a number of structures. So these are sort of running in this orientation. Mineralisation hosted within multiple deposits sitting up here through Leviticus and then Big Sky. And we've just made some new discoveries in here at Amarillo and over this side at Waratah, which we'll touch on later in the preso. So these structures all have potential to host additional mineralisation. We've been able to identify some cross-linking structures that come through at this orientation that also, so they're getting the intersection points of these two where you're getting the exceptionally high grades. Our base case PFS, we're seeing some really strong returns, and important to note, are all-in sustaining costs based around 86% of the costs leading into the PFS are from Q1 costs, so the current quarto. So this is a very high cost inflationary environment we're in, but yet it makes still some fantastic margins. Expecting this to run at roughly around the lower quartile of production costs. Really good met recoveries. You can see in here, nearly 98%. So very free milling gold. We're looking at a standard CIL processing plant or CIP processing plant. The study, we had very recognizable names in our study group. Anthony ran this, GR Engineering, Entech, ALS Metallurgy, and many well-known names within the industry. The important metrics of the project, we can see in here too, these first 3 years, we're averaging over 80,000 ounces in the first 3 years of production at fantastic margins. We're looking at a throughput grade of 4.4 grams in the mill and dominated by that open cut component. The stage 2 PFS will be focusing on this back end. So really adding mine life to what we're currently seeing in the stage 1. Sensitivity, as with a project of this scale, it's not really capital intensive, and it's not really very sensitive to capital. We're looking at 121 million initial pre-production capital, and you can see the relationship in here to costs because of the grade and capital. The 3D model, we've incorporated the PFS data and design into the 3D model. Can be found on our website, which include this presentation as well. And you scroll down on the home page, just want to look for that zone there. The initial PFS design. So the initial years will focus on this area, processing plant, central to the operations, and just off screen in here, you can see the camp. We've got a ridge running down the center here, and then the main Great Northern Highway is just off screen, running out here, about 3 kilometers from the edge of the project. We focused on the leaner break of day and white heat zones. You can see those open cuts and small underground at break of day for the stage 1. And you can see the amount of resource we currently have in here in these zones that are not in the stage 1. So the intent is to continue to move these into a stage 2 PFS. This mineralization is also open at depth. So all these deposits, leaner, break of day, and white heat, are open at depth. We've drilled these break of day and leaner down to about 300 odd meters and white heat down to about 200. So they're not yet deep. So we've got a lot of upside as we continue to trace these down dip. Site layout and permitting. Permitting process is underway. We'll be applying for native title vegetation clearing permits. Discharge licenses and mining proposals will go in over the next number of months. And that'll lead into the stage 2 PFS later in the year. And so hopefully all our approvals will be through by this time next year, if not mid-year next year. We've had really good relationships with the native title in the Batamaya, and we're continuing to work through cultural heritage management plans, which is the new legislation in Western Australia. On the ESG side, we've been focusing on hybrid power solutions for the project and also minimising our ground disturbance. We've got 2 streams. So we're running both an exploration focused stream, which is discovery and resource growth, and a development stream, which is PFS stage 2 and permitting. Really, the PFS stage 2 is focusing on adding mine life. So this is a significant component of what we're doing in the next 12 months. The other component of the PFS stage 2 is really optimizing that development. It's really seeing where we can shave costs off, we can improve our systems on site. On the upside, We're seeing a lot of opportunities. We think we've got resource growth opportunities at a number of prospects, Amarillo and Waratah. We're seeing high-grade opportunities within the existing deposits, defining better these high-grade shoots, following those at depth. A mineral resource update is expected later this year. We're planning on that. And again, it'll lead into a stage 2 PFS. Just at some of our deposits, Big Sky. Again, this has only been drill tested to about 100 meters. So lots of opportunity at depth at Big Sky. To the north of Big Sky, we've got Amarillo. This is yet to come into resource status. This is about 400 meters of strike. And this will come into the resource later this year. And there's some of the intersections we've been getting at Amarillo. So some high-grade zones within that. Amarillo sits in here. We've got the Waratah trend in here. Again, 4 meters at 30 at Waratah. We've seen some really high-grade components to our resource at break of day. We're following those up through here. And we're also doing early stage air core drilling for new discoveries out on this eastern limb. So we've got a really good development pipeline. We've got workflow coming forward. We've just completed 25,000 meters of combination of RC and air core drilling. Those results should start flowing through in the next 2 weeks. Pre-feasibility, we've delivered on stage 1. Stage 2, pre-feasibility March next year. MRE update before then, later this year. And resource conversion drilling. So another key component is converting more inferred into indicated. And once we have that in indicated, that can then move into the PFS stage 2. That's Musgrave in a nutshell. Very high grade, close to surface. Stage 1 PFS shows great economics, and looking forward to a very bright 2023. Thanks, everyone.
Well done, Rob. Great presentation. You just have to take your iPad with you, how to disengage that. Thank you so much, Rob Waugh. Next up on stage, a lot of you in the room for this one, we've got a 5-bagger. Got to get bigger. It's time to do our research. Listen to our next presenter, see what we think. The opportunity is located in the most prolific nickel belt in Australia, which of course is Kambalda, 60 kilometres of prime Kambalda land. The company is Lunnon. The story is shared to us today with this fellow here, Ed Ainscough, ridiculously talented geologist. He's been involved in projects in 4 different countries, and as you look at him, I think it's interesting to note that the reminder isn't in the amazing projects. Well, probably it is. You've got the amazing projects that you've been involved in. You've got the passport stamps. He's also got 4 other little creations that he made along the way with his wife in the 4 different countries. So in every mining town he's been into and created a great project for investors, he's also created his own little project. So he's got 4 children who, interestingly, weren't named after the towns that they were conceived in. God. No, that's right. Would you like to talk about mining? Is that more your bag?
Yes, I think.
Excellent. Welcome him, please. And we're talking Lunnon.
Thanks, Chrissy. Thanks to the conference organisers. Particular thank you to Euros Hartleys. They've been great supporters of the Lunnon story over the last 2 years since we listed. This presentation has been lodged. Please feel free to read the disclaimers at your leisure. So we're in Western Australia, headquartered in Perth. Obviously, as you'll hear throughout this conference, Western Australia is a centre of excellence for mining and exploration, comes along with a very world-class regulatory framework. Our assets are in Kambalda. Kambalda, as Chrissy said, Australia's most prolific nickel belt, one of the world's most famous nickel belts. 1.6 million tonnes of nickel metal has been mined in Kambalda since it was found back in the 60s. So there's been 55 years of almost continuous mining and exploration activity for nickel and gold in Kambalda. So as you can imagine, there's a significant amount of infrastructure in place, and we're able to leverage off that infrastructure with our plans for our assets. So our environmental impact will be low. The value of our assets, though, is very high. The mineral resource sits above 3% nickel. We've shown and are continuing to show that it can produce a premium concentrate, again, because of that infrastructure. The lead time to move from being an explorer to a developer is quite short. And once more, because of that infrastructure, the capital to do so is minimal. And all of that has a positive impact on the communities within which we operate, particularly Kambalda and Kalgoorlie. It's good for them, it's good for jobs, it's good for the spend by us, spend by our employees. It gives those resilient communities the certainty that they need to have confident projects moving into the future. So those of you who don't know the geography of WA, Kambalda is about 600 kilometres due east of Perth, just south of Kalgoorlie, as I said, the major regional mining town of Kalgoorlie, 30,000 people or thereabouts. We've been listed for 2 years and we've had a very successful 2 years. And a lot of that success is down to the fact we made a discovery called Baker, and I'll give you some details on Baker in a moment. But we've grown our resource by nearly 50,000 nickel tonnes in 2 years, and we've done that at a very competitive cost. As you would imagine, with the discovery and that mineral resource growth, the news flow has been excellent. We've drilled nearly 54 kilometres of drilling in the 2 years. We've also reprocessed nearly 12 kilometres of historical core, which comes from WMC vintage days. We've got access to over 500 kilometres of historical diamond core in Kambalda that enables us to go back, recut, relog, and move historical mineralisation into JORC compliant resource. But we haven't relied just on the drill bit, and we've also grown by acquisition. Last year, we did a deal with our major shareholder, Goldfields, and we acquired the last 2 historical nickel mines, Silver Lake and Fisher, that had never previously been transacted. And I'll give you a little bit of detail on that in a moment. And in parallel with that acquisition, we raised $30 million with our friends at Euroz Hartleys and Argonaut. But just as importantly, we've recruited an executive leadership team over the 2 years. The team has deep operational, transactional, legal, commercial, geological experience, not just in the mineral industry, not just in nickel and gold, but actually in Kambalda. That stands us in really good stead for the future. But just a quick step back, 20 years ago, WMC that found the district in 1966 made a strategic decision to sell its ownership of its nickel and gold mines in Kambalda. I was the last chief geologist in Kambalda for the St Ives, for the gold side of the business, and the first chief geologist for the company that bought those assets, Goldfields of South Africa. So when it sold its nickel mines, it sold them to 3 junior companies, Mincor, Independence and Panoramic. And the chart on the left has got 3 pairs of bubbles. The smaller bubble in each case is the amount of nickel that WMC mined to the point that they sold those assets. The larger bubble is all the nickel that's been mined to date. And the difference between those 2 circles is obviously a lot of nickel. There's a lot of nickel left on the table by WMC. It allowed those 3 junior companies to become 3 significant companies during the last nickel boom. Our assets, as you can see on the table on the right, were shut already. They'd shut 5 to 15 years before that transaction by WMC. So they got sold with the gold to Goldfields. So they lay fallow until we got our foot on them in 2015. Essentially, no exploration at all for the best part of 30 years. Our value proposition at IPO and our value proposition to this day is that our assets are underexplored and we can enjoy the same uplift, the same benefits that those 3 junior companies did when they bought those assets originally in the late 90s, early 2000s. So we like Kambalda for that very reason. A few other people like Kambalda. It was mentioned earlier, I think in Victor's panoramic presentation. Mincor is our nearest geological and geographical neighbour. They're under takeover offer by Andrew Forrest's mining investment vehicle, Lunnon Metals at the moment. He's gained control. I think he's at around 61%. The reason we like Kambalda, the reason why Lou like Kambalda is it is a globally significant belt. It has been and will continue to be a key source of high-value strategic nickel sulfide units in the ground. And we've got off to a great start. We're just under 3 million tonnes in resource at just over 3% for just under 90,000 nickel tonnes. But as I say, we think our tenement's underexplored. We've had a great start, but we think there's a lot left to be found. So this is how our assets stack up. Baker is the discovery. It is now our most advanced asset in terms of drilling and permitting and knowledge. It's gone past Foster. Foster is the asset we listed on. Foster listed with 39,000 nickel tonnes. We've grown that though to 57,000 nickel tonnes. It is a substantial asset in its own right. We're busy finalising a PFS for Baker. That should be out in the next couple of weeks. It will enable us to report ore reserves. More importantly, it will enable us to sit down with potential offtake partners to discuss the commercial terms of a possible offtake for the Baker mineral resource. At the bottom there, Silver Lake and Fisher. At the base of the pyramid, that's our news flow. We want to keep drilling. You can't make a discovery if you haven't got the drill rigs turning. So that allows us to keep really strong news flow moving forward. Hopefully we'll make a significant discovery and continue to grow our mineral resource at those two assets. And then at the very base is that historical core program, 500 kilometers. It's all accessible in Kambalda. Not all of it's in a great state, but generally we have very good access. We can get it, we can cut it, and it enables us to grow independent of the drill bit. So just a quick look at Baker. It's just under 1 million tonnes at very good grade. Significant feature of Baker is the indicated resource, which is the subject of the PFS, is in the top 200 meters. So it's very shallow. Because it is shallow, we've been able to drill it really aggressively. So we've put 20 kilometers of drilling into Baker since we found it 16 months ago. Because it's shallow, we've drilled it well. It means we've quantified the risk and we think the risk is low. We know more about Baker as a development asset than probably any other nickel asset prior to its development in Kambalda's history because of all of that drilling. But the value is high, so the risk is low, but the value is high. The mineral resource, as said, is very high grade. Metallurgical test work suggests we can produce a premium concentrate. It's high in saleable nickel, copper, and cobalt, and importantly, it's low in deleterious elements, most topically arsenic. If you followed the Mincor story, there's been some issues with arsenic in the feed to Nickel West. We've mapped arsenic from day one, and we're in control of it, and it's low. Again, you can see on this image, there's an open pit in the top right-hand corner. That is an old gold open pit. That's only 450 meters away from Baker. So very quick to get into. That will be the portal site for the future underground mine. So the lead time again is low. We're on granted mining tenements, significant existing infrastructure in place to access that premium product. Often when you get to the PFS stage, just watching Rob's presentation before me, you forget to show any drill results because it all becomes about tons and grade. So I think it is important to look at those drill results. Baker has had some fabulous results from when we found it, the likes of 7 at 9.2, 9.5 at nearly 7%, 5 at 4.5%. It's a very high grade deposit. As you can see from that image, it's well drilled and it's extremely shallow. So Foster, as I said, has kind of fallen behind. We've had obviously a lot of focus on Baker because it's been such a good discovery. It is a significant asset, as I said earlier, in its own right. There's 9 kilometers of decline development in place at the old Foster nickel mine. That development is flooded, but we've already permitted to dewater, take and discharge that water. Again, it's on a granted mining tenement, so there's significant infrastructure. We have mine offices, mine workshops in place from when Foster was an operational mine in the early 90s. The mineral resource is spread quite evenly over the 500 vertical meters of the mine. So as we re-enter that mine, we'll be opening up and able to access nickel sulfides as we go down. Once Baker PFS is reported in a couple of weeks, the focus will shift from Baker to Foster. And the key focus will be, is there a benefit, is there synergies of scale to do Baker and Foster together, or should we do Baker first and Foster second? And that focus will kick off, as I say, in the next couple of weeks. To the 2 assets we acquired last year, Silver Lake and Fisher, that plan view in the center of this slide is a plan view of Kambalda. The Nickel West concentrator is the white dot right in the middle. The yellow trace is a geological contact between the basalt and the komatiite, those 2 rock types. At that contact, all the nickel that's ever been found in Kambalda, 1.6 million tons, is at or extremely close to that contact. And you can see the blue circles on the north side hugging that contact. They're the past and current operations of Mincor Resources, our nearest neighbour, subject to takeover. We have the southern half of the dome. Mincor's got the north half. We've got the southern half, the nickel rights. No significant modern exploration for up to 30 years. So we're really excited, but particularly excited about an area we called Long South Gap. And we just announced a couple of weeks ago, we did a 2D seismic line. Interestingly, Mincor in their target statement have done some fantastic work on the geology side, generated some awesome new exciting exploration targets. And one of them, their East Dome corridor, runs straight onto our ground. That Long South Gap is a 2-kilometer strike with no drilling. And that's not no drilling since WMC, no drilling even by WMC. So we're very excited. The seismic line showed some walk-up drill targets, showed that the contact is a lot shallower than we expected. We'll be trying to get the drill rigs on that as soon as possible to test that. So news flow is definitely all about Baker. That should be out in the next couple of weeks. As I said, we'll then initiate discussions. Nickel West have an option on the nickel of our tenements, but we've had to show them obviously that we have a schedule, what we're going to mine, at what grade, over what period. That process can now commence. Then we'll shift the PFS focus to Foster. We'll continue to permit Baker and Foster. There isn't a lot more to do. There's a mining proposal required, but most of the technical work's been done to submit those mining proposals. As I said, we're on granted EMS. The lead time to move from explorer to producer is extremely short. And then we'll obviously continue with the news flow for the exploration portfolio, most noticeably South Long Gap and the 2D seismic work I just showed you. Quick look at the board and the management team and a corporate snapshot. The 10 faces you see there, 5 of those faces actually lived, worked, and were residential in Kambalda during their professional lives up there for probably a cumulative period of 50 years between us. Very simple structure corporately, just under 200 million shares. Share price is bouncing around $1 and makes the maths easy. No debt, still plenty of cash left from that raising last April. And you can see the mineral resource there, just under 88,000 nickel tonnes. Covered by 4 companies. We really appreciate their coverage. The key part of the capital register is Goldfields sit there at 34% as our major shareholder. The other top 20 is made up of a collection of funds. I think Tribeca and Cranport are also big supporters, and then some high net worth individuals, mostly in Western Australia. So nickel is a key part of the energy transition that Chrissy has mentioned opening up today's presentations. We've got 4 historical mines. We've made 1 fantastic discovery. We've been aggressive, but I think we've been rewarded for being aggressive with that discovery. We're growing our resource base and we're expanding our influence in the district. Kambalda is a great place to do business. It's a great place to build a mining company because of all that infrastructure, because of that history. It makes that cheap. It makes it capital light. But without doubt, the value that underpins Kambalda, Lunnon Metals is Kambalda. It's our address in Kambalda. It is a premium, high quality, globally significant nickel belt, and we're blessed to have 50 square kilometres of it. It stands us and our shareholders in good stead. Thanks very much. Enjoy the rest of the conference.
Well done, Ed. Go and ask him if he's ever planning to move countries again. That could be interesting. I was mentioning a slide beforehand, and we'll just pop that one into the queue there so you can have a look. So what I was talking about, you can see the QR code down there. So there's just a few more of you in the room at the moment. If you get a photo of that, what we're doing over the next few days is we're doing online polls, just a little bit of research of not our own, but Euros is doing that. And just so our first question was, what percentage of the world's energy is currently derived from renewable resources? So at this point, we've got 43% of you saying 2 to 5%, 29% at 5 to 10%. So as it goes, and we'll do something with that, very intellectual by the end of the 3 days, and we'll come back and report to you on that one as well. Are you ready for this next discussion? Dr. Andrew Tunks is joining us. He, the knowledgeable one, the geoscientist extraordinaire, is joining us. You've been using your very impressive list of skills and your resume of experience that you've gained over the last X amount of decades, securing this new project, haven't you? We're going to Brazil now. We're going to talk rare earths, and let's hear what the story has been with Meteoric. See if it really has been a meteoric rise in the last 12 months and where he intends to progress us as potential investors as part of the story. Please make Andrew very welcome.
Thank you, Chrissy. Just before I start, it was awesome to hear that last presentation from Ed. He talked a lot about Foster Decline. That was where my geological career started as an underground mine geo. So I was very interested to see that coming back. I hope you'll give me an extra 30 seconds for that, Chrissy. Meteoric Resources, we have traditionally come here and spoken to you in the past as a small gold company. We've had some ups and downs over the years. And in October or late September last year, as I was reeling from the AFL decision not to allow a gold enrichment and take us out of the finals, I was presented with a new project in Brazil by my Brazilian team. And it is truly a world-class project. I think it has the opportunity to become a tier 1 project and be globally significant and change the way that rare earths operate on the planet. This is an amazing project. Our share price has moved significantly since then. We started at the acquisition with a market cap of around $20 million. That's now closer to $300 million. And as investors, you might look at that and say, I've missed the boat. I would tell you that that is absolutely not true. Today is the first time that we have stood up and publicly talked about this project. We've been doing some additional land acquisition in the meantime. So yes, there's been share price appreciation, but we are really at day 1. And now we are about to go on a worldwide tour and introduce this to companies and institutions outside Australia. This is your opportunity to get on board of what I believe is the most exciting project in the world in the rare earth space, bar none. Just a quick background for those of you who don't know about what rare earths are and why they're important, and I'll go through this very quickly. But they are a collection of 17 different elements that are crucial to the electrification of the economy. You all carry rare earth elements around with you every day, on your phone, on your TV. Okay, they are a crucial part of the world, but 4 of those 17 elements are particularly crucial. They are praseodymium, neodymium, terbium, and dysprosium, and they make up these very amazing, extremely strong magnets. So NdPr are low temperature application magnets, and terbium and dysprosium for higher temperature applications. So in all your electric cars, in your electric windmills, in your Dyson hand dryer, if you've just been to the toilets and stuck your hand inside the hand dryer, Dyson use rare earth magnets. Every electric motor, the whole electrification of the economy worldwide depends on these metals. Elon Musk recently said, and an important factor about this is that China controls both the mining and the distribution of the metals. And Elon Musk recently said, I'm going to have to go away from rare earths because it's too hard to get them from China. But if he does that and he puts ferrite, which is iron magnets, back in his rare earth, in his EVs, they're only going to have half the range. They're only going to accelerate half as fast. They won't be nearly as attractive. So rare earth magnets are crucial. Okay, I can't emphasize, if we're going to electrify the economy, it'll be done because of rare earth magnets and lithium batteries. Now, we might re-engineer the lithium battery out, but we can't replace the magnets. To take a step into geology briefly, there are 2 broad classes, this is very high level, of rare earth deposits. There are what are called the primary deposits on the right, and all of you here will know about Lynas, Australia's great rare earth producer. So don't worry about the Chinese deposits, these are the Western world deposits. Okay, so Lynas is the big one in Australia. They produce from Mount Weld, and they are called a primary deposit. That is, that the rare earths that they produce come from down in the ground, in where they were formed, in the rock, and they have to be mined almost like a gold deposit or a classic metal deposit, high cost, often underground mining, drill and blast, bring it up, crush it, and the rare earths occur largely in 2 minerals called monazite or xenotime. And it's hard to get the rare earths out of those minerals. You have to use extremely aggressive acid conditions. So the capital costs of these projects are enormous. If you want to get a new primary rare earth project off the ground, we're talking billions of dollars. Extremely aggressive acid conditions and the problem of uranium and thorium, because xenotime and monazite both have a lot of uranium and thorium as well as rare earths. That's why Lynas had to build their plant in Malaysia and not in Australia. On the other side, we have a new class of deposit. It's not really new because the Chinese groups have been mining these for many years. These are called the ionic clays. And this is where nature has done the work for us. The tops of the deposits are weathered, and through the interaction of water and oxygen, those rare earths have been released from those minerals and are now out in the clay. And so you can mine the clay and treat the rare earth. You don't need strong acid conditions. It's very, very different treatment path. It's much lower cost. And I believe that these deposits are the future of the rare earth world, these deposits on the left. And you should all be familiar with those names because that's where the rare earths of the future is going to come from. And a lot of the Chinese production already comes from those style of deposits. let me just tell you a little bit about what we've done. We've secured what I believe is the best of those projects worldwide. This deal was done in early December and gives us access to about 140 square kilometres of land that sits above one of those primary rare earth granites, or cyanites in this case. So we've picked up an enormous ground holding. We've picked up an additional ground holding. Our deposit is the yellow one. It's about 2 hours north of Sao Paulo. So traditionally in my life as a gold explorer, I've worked in some of the worst places ever, right? It's pretty nice to go to a project that's just outside of Sao Paulo, 3 hours drive from the airport, a beautiful part of the world, and a great history of mining. These are all granted mining licenses. These are not exploration tenements. These are all granted mining licenses in the original acquisition because they've been mined by the family that we did the deal with for clay for over 100 years. So they've been mining clay here and then later bauxite in the area. That clay was used to make house bricks. All those house bricks have rare earths in them. No one knew. 100 years ago, no one knew what a rare earth was. Then the roof tiles, and then more lately, they moved into refractory bricks, which are bricks for furnaces. And those, during that transition to refractory bricks and working with Japanese groups and Chinese groups, the local geologist, Alvaro Focci, realized that there were rare earths in the clays. And he started his own exploration program and he mapped it out himself and then ultimately did a deal with a group called JOGMEC. JOGMEC, who are a Japanese government agency, and they came in and they drilled 1,300 holes here for 13,000 metres. So a big exploration program between 2016 and 2019. And in 2019, at the start of the COVID pandemic, they walked away. Now, there's some other reasons behind why they walked away, but in fact, what they did was they took the money from exploration and they put it into Lynas. So they're one of the biggest shareholders in Lynas now because they wanted the rare earth production sooner and they were worried about the Chinese monopoly. So they walked away from this deal and we were able to acquire it. Have a look at those drill holes. That's some of the best holes that have been drilled in ionic clay. So remember that the ionic clays are lower grade than the primary deposits, but I'm telling you now that this is the highest grade ionic clay on the planet by some margin. Amazing drill holes. 85% of the 1,300 holes end in grades above 1,000 ppm. So the ore deposit is completely open at depth. This is a classic cross section. And yesterday I announced some results. We've only just started our own exploration here. And we're drilling diamond holes. The Japanese only drilled handheld auger. It's a little bit like putting in a fence hole, a post hole digger. So you can't go very deep. The average depth of the resource that I'll talk about in a minute is only down to 10 metres. Everything here is right at the surface. Even the soil is mineralised. It's quite remarkable. But we've put diamond holes in next to some of those auger holes and we've been seeing the clays. So we're not looking for the rock here. We're only looking for the clay that sits above the granite. Some of our diamond holes went down 70 to 80 metres, still in the clay. So the enormous resource that we've just announced can be significantly bigger because it's completely open at depth. The Japanese also did a whole bunch of metallurgical test work, and this is the key. If you're going to look at these if you're going to look to invest in these ionic clay deposits, this is the single biggest distinction that you have to understand. Are the rare earths available to this simple technique, which is a wash with ammonium sulfate? Okay, are the rare earths ionic? That's why they're called ionic clays. Are the rare earths bonded to the clays just on the outside, or are they still caught up inside the mineral? Do I have to destroy the mineral to get them, or can I simply wash them off? This is the test. Okay, if you see someone report great clay results in a rare earth, and they might talk about 90% recoveries, have to use pH 1. That's extreme. That's where we're spending billions of dollars. Here, I'm just washing it in fertilizer, ammonium sulfate, at room temperature. We can do it in a bucket and the rare earths come out. In fact, they come out so fast here. All of the rare earths come out in the first 10 minutes of the reaction. This leaches amazingly. This is truly an ionic clay. A lot of the Australian examples that you will look at are not. Those rare earths, the rare earths are in the clays, but the rare earths are not available to this simple metallurgical technique. And that's what makes this project so attractive. Okay, the rare earths are available. So 2 weeks ago, I announced this resource, and this immediately puts us as one of the biggest rare earth deposits on the planet, okay, at a very significant grade. It comes from less than 20% of the land holding, and the whole deposit is open at depth. So who knows how big it's going to be in the end. We don't need it to be any bigger. In fact, we probably need it to be a little bit smaller, because we're going to go and take the eyes out of the high grade portions of this. It is already the highest grade project in the world. So this is just a geological chart of grade along the bottom and tons along the top. I've taken off the names of the companies. So this is just to reflect the ionic clay deposits across the world. And you can see some large ones, but until recently, the highest grade one was that small grey dot on the bottom axis. That's a deposit in Chile at around 2,200 ppm. And that's where the chart stopped, at 2,500, because there was no way that there was going to be an ionic clay higher grade than that. We have come in at 2,600 in a global resource. That includes from surface to the end of the hole. No internal waste, no nothing. Okay, so this is where the word that you will have all heard of, off the charts, come from. This deposit is literally off the charts. It is so high grade compared to anything else. In fact, when you look at the grade tonnage curve, you can see that as we start to apply a cutoff, the grade tonnage curve doesn't move. That's because there is no assays here below 1,000 ppm. Go and have a look at some of the other companies who are announcing resources of 800, 900 ppm. We don't have any, our waste is not that low. This is a geologically different beast. I've got to hurry up. I'm sorry, I'm excited. Here are the high grade bits. I asked for an extra 30 seconds too, Chrissy. We've got some incredible high grade bits with grades over 5,000 ppm. Remember that until 2 weeks ago, there wasn't an ore deposit above 2,000. We've got whole zones above 5,000. This is where this mine will start. This is the last time we'll talk about exploration for this company. We've got exploration to do, but only to get these into measured and indicated. This is where our mine will start. And it'll be a very different mine than anything you've ever seen. No drill, no blast. Pick it up, wash it, wash the clays that had the rare earths in it, put it back, put the soil back and grow the trees. Very little acid, no deleterious processes, no drill, no blast, no waste dumps, no tailings dams. These are an amazing project. So one of the world's great investment banks wrote up a note on us just this week. And there's a lot of words. Okay. This resource smashed all metrics, and as a gold equivalent at last year's rare earth prices is equivalent to 26 million ounces at 2 grams at surface with no drilling and blasting and very low OPEX. This is a disruptive asset. All right. MEI is a must own. These are not my words. These are words of one of the great investment banks who specialize in rare earths. I would encourage you to look at our stock. I would encourage you to get on our register. You must own this stock. We are about to go on a worldwide tour promoting this to the major institutions of the world. This can change the world's rare earth industry. I hope you'll join us. It's going to be a great adventure. And Elon Musk, you should call me. Cheers, mate.
Tunks, come back. Give me 30 seconds. So if we invested in you this time last year, what were the shares worth?
This time last year, I'm not sure, but before the acquisition of this project, we were 1.2 cents, and we're now, I haven't looked today, but let's say 16 cents.
Yeah.
But I tell you, it is not too late. All right. I'm not allowed to say what I think this is worth.
Well, get off and let them come and speak to you. Go quick before you get yourself in trouble. I don't want to be responsible for the man in charge of our prospective investment future. I'm hiding behind bars somewhere. That would not be good. Stu, you know why we had so many pies at morning tea? Stewie invested in them at 4 cents. Good on you, Stewie. Thank you for that tip, because you missed out on passing that one. All right, we're going to talk to a junior next who's made a pretty exciting announcement at their wholly owned shallow gold resource. So I reckon most Aussies outside of this room, if they heard the word magic millions, they'd probably be thinking of a horse auction, correct? But in this room, we know that a magic million is something really, really special, something important. If you invest in a mineral resource that has hit the magic 1 million ounce mark at just the right time, you could possibly buy yourself a magic million horse. So this man may have just the ticket for you. Would you please welcome from the Sandstone Gold Project in Western Australia, the Managing Director, Matthew Bowles. And of course, we're talking Alto Metals. Welcome him, please, everyone.
Thanks, everyone. Thanks, Chrissy. Magic Million. Love it. It's great to be back here. I love being in Sydney. And thanks to Stewie and the team from RIU for having us back again to present. It's certainly been a great year for us. I'm going to talk about some of the key achievements we've made, one of which is, as Chris has alluded to, the major resource update we announced last month. We've had rigs back on site following up on some of the results from last year. And we keep finding some fantastic gold. The team is sort of just doing a superb job in finding not only gold, but some really good grade gold. And this story, as you'll see, for those of you who've seen the story before, is evolving quite rapidly. And what a great time to be doing it in major gold sort of prices just at record highs. And our resource is still based on some robust numbers. So yeah, really, really excited. And I think you'll see why we're so excited about this and how the strategy is changing from just rapid resource growth to really now getting onto some of those high grade structures. Just a disclaimer to read in your own time. So very quickly, so we're a West Australian advanced gold explorer. We're surrounded by a number of, in the East Merchants of Western Australia. So it's a great sort of world-class gold district surrounded by a number of multi-million ounce mines and key deposits. And sandstone sits over 740 square kilometres of the sandstone greenstone belt. So it's a really dominant land position over a historic belt that's had a lot of historical mining. It's already produced over 1.3 million ounces. And so the endowment with our current resource is well over 2 million ounces. So there's a lot of gold there. And we can see there's a lot more gold to be found. The resource itself now sits at 832,000 ounces. I've got a slide on that I'll go through a bit more detail, but the key things to take away is it's within optimised pit shells, and it's very, very shallow. 90% of that resource is less than 150 metres from surface, and there's a big oxide component to that of about sort of 50%. And as I said, we've had some announced some results the other day. They were fantastic. I'll run through those. It's about the first time we put an announcement, Bonanza Gold. I was a bit sort of worried about sort of sounding a little bit silly with Bonanza, but it was 3 metres at 62, which you don't see every day. So it was pretty much a given that we get something like that out in our results. And we've got some more results pending as well. So we're hoping, it's all from Indomitable, and we're hoping to work through and see some more encouraging numbers. So just quickly on the corporate side, and I won't spend very long on this, but we've got about 640 million shares on issue. Share price is sitting about just over 6 cents. So market cap's about 40 million bucks. It's a very, very tightly held capital structure. The top 20 hold about 70%. Those shareholders haven't changed in the last 4 years. So we've got a really, really strong supportive shareholder base. You can see from the chart there, we have really been moving sideways for a while. And I think that's an indication of, I guess, where the gold juniors have. They haven't had that re-rating yet that we can see that's coming for gold. Certainly with a lot of the producers now benefiting from that higher gold price and haven't been investing in exploration. There's certainly sort of quite a bit of M&A activity happening. And while that's not our focus, it's really sort of develop a standalone operation for Sandstone. It's certainly got the optionality, and that's what the next slide, I hope the next slide will go through. So on the resource, just quickly, so yeah, it's 832,000 ounces. It's an independent resource. It was completed by Snowden's Optiros, and we used a $2,500 gold price compared to we're just under $3,000 Aussie gold, so quite conservative. The reason we used Snowden's, we wanted to have an independent resource out there, so to demonstrate this is a really robust resource. And as I said, it's sort of 1.5 grams a tonne. It's a really good grade for a gold open pit resource. As I said, they're all open pittable. And a key part of it to highlight is that 90% of that, as I said, is very shallow at less than 150 metres from surface. We've undertaken some initial metallurgical work, which is one of the key things you want to look at when you're considering investing in gold companies. And we're getting fantastic recoveries up to 98%. So from what we can see at the moment, this gold can be liberated through a very simple CIL process. So we're ticking all the right boxes and we're de-risking this project as we advance it. Down the bottom there, you'll see that we, on an unconstrained basis, and the difference for those of you, constrained and unconstrained is basically the constrained puts the optimized pit shells around it. So if we take the pit shell away, what our current resource sits at is just over 1 million ounces. And the reason we've shown both is that so I guess investors can compare, because when you're looking at a number of our peers, they may be showing sort of open pittable and underground resources. So we really wanted to demonstrate what that overall resource was. But the key thing to me that jumps out is of how much of that resource converts into optimized pit shells. So it really, really is quite robust. And that's a great thing to see. And the guys have done a fantastic job to achieve that, which is an amazing milestone for us. And we really hit it hard. And I think this really shows the grey bars there is the drilling that we've done over the last couple of years. So year before last was 60,000 metres. Last year was 50,000 metres. We've hit sandstone hard and it is constrained by drilling. And I think this slide clearly demonstrates that. The more that we drill, we're adding a lot more ounces. And still, from what we can see, those optimised pit shells are constrained by the drilling. So if we stepped out further, that resource we expect is going to continue to grow. And this is probably one of my favourite slides now. I guess we're explorers in our DNA, and so we love to sort of find a lot of gold. And so the guys are doing a fantastic job there. And we just really wanted to highlight the purpose of this slide is to demonstrate some of those fantastic drill results that we're putting out now. We had over 20 metres at over 7 grams from Indomitable, all very shallow, less than 40 metres. And as I mentioned, our best result to date, 16 metres at sort of 13 grams, including that bonanza grade. And you can see there from the inset is the RC chip that one of the geos took. He was pretty excited when he saw the VG there. It's always nice to see some visible gold. So we're not only finding sort of really good, robust sort of average grade gold when you sort of like look from a resource point of view, we're getting those high grade structures. And the more we're drilling, certainly from Indomitable, and that's where most of this drilling is, we're understanding this deposit more. And Indomitable has considerably grown, and that's what I want to talk through. So just stepping back where we are located. So as I said, we're in the East Murchison. So the blue outline is our footprint. It's over 740 square kilometres over the majority of that sandstone greenstone belt, which is essentially the triangle in the middle there. And you can see we're strategically, we're in a fantastic spot, quite an enviable spot. We're certainly not in the middle of nowhere. We're surrounded by a number of mills. Any of those mills, they're all operating right now. The infrastructure there is fantastic. We had a site trip last week. We flew up to site, so you can charter a plane up to site. You can fly up to Mount Magnet. There's commercial flights up there. You can drive up. It's about an 8-hour drive. It's quite a nice drive. It's actually better than driving up to Kalgoorlie. And there's sealed roads running through from sort of Agnew to Mount Magnet as well. So it's from an infrastructure point of view, it's a fantastic spot for us. And an optionality, I guess, if you're familiar with the Alto story, you do know that we've had a number of takeover approaches in the last sort of 18 months. And I think we see that as an endorsement, not only of the project itself, but also sort of that screams that optionality that's there. But for us, the strategy is, and we believe that we can take this to be a standalone gold project and start to consolidate the region ourselves, which is a pretty exciting spot to be in. And that's why I've been focusing on growing that gold resource quite rapidly. So we're just down in the southwest. So our focus has been on the Alpha Domain, which is in the southeast of our property. So if you imagine that sort of sandstone greenstone belt, it's effectively a triangle. It's on two sides, abutted by two major shear zones, so two big gold fluid highways, Edale Shear on the eastern side and then the UME Shear on the western side. And we're looking down on the southeastern side here. And what's happened is the rocks, I won't go into the geology too much, but sort of essentially what's happened is the rocks have folded back around themselves at the bottom of the screen, and they've folded into themselves, and they've created this 20-kilometre long corridor that's run all the way up to the top there where Indomitable sits, and then it's refolded back round. So you've got this really nice fold closure. It's a key sort of track for gold. And when we started looking at sandstone and all the areas that we were targeting, the reason we looked at the southeast area is that's where our current resources were. So we're not going to leave gold to find gold. And we knew that those deposits hadn't really been tested at depth. They hadn't been tested along strike. And we've started to sort of systematically test these, I guess, key camps, starting at the Lord's Corridor, which is now over 400,000 ounces. Then moving up to Vanguard, which the year before last was 50,000 ounces. That's now 150. It's still defined over 2.5 kilometres on a northwest-southeast trend, and it's still open in all directions. And then last year we hit Indomitable hard, and I guess we had a lot of questions as why we weren't going back to the Lord Nelson or Vanguard, because we had some fantastic results from there. But the whole strategy has been to demonstrate this whole area can support a standalone operation. And Indomitable last year was 70,000. We've now grown that to 210,000 ounces. So it's a fantastic outcome for us. It's defined over 3 kilometres. And we see that as now becoming our lead project, which is interesting, because if you'd asked me that question about what was my favourite project 18 months ago or 12 months ago, it certainly wouldn't have been Indomitable. But from the drilling that we're doing, it's getting really, really big. And that's what I want to highlight. So Indomitable, as I said, we're at the top of that area. So you can see there from the dark blue is the BIF that's coming around. It's the folding around the stratigraphy. There's a big sort of structure running through on the northwest, and then you can see that's where all that gold's falling out. And from what we've seen so far, it is open in all directions. The drilling sort of certainly hasn't closed that out in any direction. And what we're starting to do now is start to look at testing at depth. This is probably the key slide here, and I don't know whether you can see on this side here. So the red, this is the main deposit at Indomitable, and the red is the outline of the optimized pit shell. And you can really see there's just no drilling out here. So this is looking south, so this is out to the west or to the east. And so really the drilling is just limiting the optimized pit shell. So we're expecting to step out there and that resource will continue to grow. But the key thing is we've demonstrated that Indomitable is a very, very large footprint. The most important thing about it is it's the oxide footprint. And this is shown on this side. When you think about where does all that gold come from? It's certainly come from depth. We've defined a footprint that's over 3 kilometres long. We're getting oxide. There's oxide down to, in some areas, 190 metres, which is quite exceptional. So there's a lot of weathering that's been going on. That gold's certainly coming from somewhere, and it's coming from depth. And I think these last couple of high-grade results that we've announced have really indicated that we could be onto something much bigger at depth. And that's what the plan is now. So we've, rather than sort of going and continue to grow that resource, which we've demonstrated will grow, we're now starting to highlight and target those, get the orientation on those high-grade structures or shoots and demonstrate that this will go down. I think that's really going to open up the whole sandstone corridor, because that's what it's needed for a long time. It hasn't had a lot of that drilling at depth. I'll just jump through this slide because I want to get to the next one. And this is really the slide that highlights that deeper drilling. And you're probably familiar with this slide if you've seen it before, but the image on the left is all show the black dots is all the drilling that's ever been done over sandstone historically, and it's had a long history of mining up, mined originally in the early 1900s. And so you'd be forgiven for thinking that sandstone's really tested and done. And a lot of that drilling has really been driven by a very shallow oxide because of a small oxide mill and sort of the gold price at the time. But when you look at the image on the right, which is the same image, and it just shows all the drilling that's deeper than 100 metres, this entire greenstone belt has not been tested, which is pretty amazing for an entire greenstone belt in Western Australia. And when you look at Mount Magnet or Agnew and the endowment there, which is multiples of where sandstone currently is, and they've all got underground mining operations. There's no underground mining happening at Sandstone. So I think the potential for us, we're certainly finding those big oxide footprints as a really strong indicator. I guess, some people use the analogy, it's that geochemical anomaly. And we've got a 3 kilometre long anomaly. In some areas, we've got 190 metres of oxide. It's a big footprint. And now we're about to go and test that depth. So that's really quite exciting for us. And I think, the team have demonstrated they can find a lot of gold. We've had some amazing discoveries along the corridor so far, and I think we're really excited about what we can see could potentially be at depth. And so that's it for 2023. It's a lot more drilling. We're very much an advanced gold explorer. I know we're sort of talking about strategies about standalone, but you've got to find a lot more ounces, and that's exactly what we're doing. We believe we can do it. We've got some results still pending from our first phase 1 drilling of 5,000 metres and completed. The drilling was completed last month. I said we announced the first assays the other day. We've got some more coming through, and then we're going to have a rig back doing another phase, 5,000 metres drilling, and then following up some diamonds. So it's going to be a key year for us, and I think this could be the key year for Alto. And I think I'll leave it there, other than to say we're at booth 30, and I'll be here for the full conference. So please come and have a chat to us at the booth. I'd love to sort of talk about the story more. Thank you.
That picture that he gets always so happy about, the one that you showed this year, there's that little, I was having a look at this picture with him earlier, and it's actually taken on an iPhone. The definition in that was just really amazing. Have you got more pictures up there to show people?
There's some at the booth.
You'd have everything at that booth. He loves it. Would you please put your hands together for him, everyone? He's gorgeous individual, that one. And always good to have Matthew with us. Hey, next up on the RIU stage, Paul Locke. Paul is the founding chairman and the managing director of Pan Asia Metals Ltd. They were listed on the ASX back in 2020, and they're the only licensed lithium project in Southeast Asia. There's a couple more, though, starting to emerge in the same area there, which this man here says is very exciting. You're also targeting, I suppose, the battery and the auto manufacturers that are in that area as well. So we'll be talking about Neuracity, all sorts of things. I'm going to get off and let you have your whole 15 minutes. Would you welcome Paul, everyone?
So, good afternoon. Can we hear me? Can you hear me? Good. My name is Paul Locke and I'm the Managing Director of Pan Asia Metals, and I represent a really great team of people. So Pan Asia Metals has a market cap of around 40 to 45 million on any one day, and about 160 million shares on issue. I've said that now because I don't have that slide for a reason. Okay, so 4 key points to get started with, if I can work this. There we go. First, we are the only lithium explorer developer in Southeast Asia with JORC compliant resource, which is a really big thing. We've been there for a long time. We know the area and we're number one. Our lead project, the Rionket project, has 2 prospects. The Rionket lithium prospect has a JORC resource, 10.4 million tonnes. It's about to be upgraded. And the Bangitum prospect, which is 8 kilometres to the north, has an exploration target of 8 to 14 million tonnes. And we've expanded that area by 200% recently. So we're expecting some really good stuff out of this project. 3, we actually want to move, or we are going to move past the concentrate to produce a lithium carbonate. So all of our test work at this point is producing a lithium carbonate. Our latest results we announced had lithium in solution with up to 88% recoveries. And we're in active discussions where we want to form a joint venture with a knowledge partner to produce cathode active materials. And 4, 45% of the company is owned by the board, management and staff. So there's a lot of skin in the game. We want to build a really good company and we're dedicated to do that. So looking at the supply chain, I've mentioned that we want to move down into refining CAMs. Why do I think we can do that? Because we're in Southeast Asia. Southeast Asia is really the manufacturing or the workshop of Asia. There's a lot of car manufacturing down there, electronics and so on. So we're in the right cost environment. The reason manufacturing heads to Southeast Asia is cost. So we're in the right environment and we have a lot of chemical processes around us and a lot of battery and electric vehicle companies moving into the region, which I'll get to in a minute. So we're confident we can get to CAM. Asia produces 55% of the globe's vehicles. This includes India and China and Southeast Asia, which is absolutely massive. So we are very focused on delivering product into Asia. We see no need to get excited about the IRA in the US or whatever the Europeans are doing. There's going to be so much demand for lithium chemicals in this region that we don't have to look much further than Thailand. And as we expand our project portfolio and our operations, we're going to still be processing in Asia. So it's really exciting. But further to that, 95% of 2- and 3-wheelers are manufactured in Asia, mostly India and China and Southeast Asia. People don't really realize how massive this market is. Anytime you see a picture of Bangkok or an Asian city, there are bikes everywhere. It's just the key mode of transport. So this is a massive market and there are electric bikes already, particularly in India. It's leading the market, or with China with electric bikes. So when we look at our region, there are 4 key countries in Southeast Asia. So Vietnam with VinFast and Samsung is there, Cattle's moving into there, BYD's moving into there. Thailand with 20 auto manufacturers, 14 battery electric vehicle projects, 18 battery projects. Cattle is there. Mercedes is producing its EQS EV there, its flagship model there. So if you see one on the streets of Sydney or Perth or wherever, it's from Thailand. And then the Chinese manufacturers are already moving in there. So we've got BYD, Great Wall manufacturing there, and we've got Geely and other battery companies moving into Thailand. In Malaysia, we've got EV building a battery factory. So EV's a mid-tier battery company, which is actually globally very large. And we've also got Panasonic building building a battery plant to produce 4680 batteries, which goes into the Tesla. And then Indonesia, there's a lot of activity there around nickel and so on. And then India with 10 EV manufacturers, brands which we don't know of, and 15 bike manufacturers. One firm there called Ola, we've never heard of it, produces a top-end electric bike, goes over 100 k's an hour, and they produce 30,000 per month already. So that's a massive market too. And then us in Thailand, and to put the icing on the cake, why we like Thailand, Thailand is the 4th largest auto producer in Asia, excluding India, and the largest in Southeast Asia. 20 brands are manufacturing there. Our projects are located just out of Phuket. So our key project is 40 minutes out of Phuket, the Rionket lithium project, and the Katatong project, which is under application, is 30 k's to the north. So it's an absolutely fantastic place to be, to move downstream and produce more than a concentrate or more than lithium carbonate to produce a can. The policy settings in Thailand are unbelievable. It's all about retaining the auto companies that are there and attracting new auto companies, and they're achieving it. And the Thai administration introduced a mining policy which encourages exploration for critical metals. Given that we're the only explorer developer there with a critical metals project, with a lithium project, we're actually in a really good position. We've got getting a great acceptance from the Thai government. Then we look at the Rionket project. So I mentioned this is 40 k's out of Phuket. Rionket has a 10.4 million tonne resource at 0.44% Li2O. I'll get to that in a minute. It seems low, but it's not. And then Bangi Torm, an exploration target of 8 to 14 million tonnes at 0.5 to 0.8% Li2O. There are 2 pictures here. There's a 240 megawatt hydro power station on the grid, which goes past our project. And in the grid picture at the top, you can see some really big poles in the background there. So we're tapped into the grid right on the doorstep of our property. And it's likely that we can produce a green product, probably carbon neutral. Also, there's plenty of room for solar. So this is a sparsely populated agricultural area between the tourist centres of Phuket and Krabi. So there's no tourism here, it's agriculture. The Rionket project has had 102 holes drilled into it, and we've moved our rigs over to Bangi Torm. So right now we're doing a resource upgrade with CSA Global. On the right, you can see a cross section there, and you can see the pegmatites. It's a pegmatite dike swarm. And you can see composite widths of up to 60 metres, over 60 metres, and in the 0.6 to 0.75%. And there are individual intersections over 1%. So when I said our resource grade is 0.44%, it's based on a block model, which actually catches a lot of the rubbish in between. So to address that, we've done ore sorting test work, where we increase, in this example, the head grade of the ore from 0.5% to 0.92%. So basically, all the waste was below cutoff. We didn't lose any lithium in that. Since then, we've delivered beneficiation test work, which was pre-ore sort of a concentrate of 3% Li2O, which is typical of this style of mineralisation, and recoveries up to 80%. When we redo this work on ore sorted material, we expect that 3% will increase and our recoveries will increase. Further to that, we've started our chemical test work to produce lithium carbonate, and on 4 tests, we've got up to 88% recoveries of lithium into solution, and in the near term, we'll be producing test results for lithium carbonate production. At Bangi Torm, you can see here 2 black rectangles called exploration target zone. Our exploration target is based on these 2 areas. They're 1/3 of the entire target zone. And what makes us really excited about Bangi Torm is the grades and the potential size. So our exploration target of 8 to 14 million tonnes at 0.5 to 0.8% Li2O is based on 1/3 of the target zone. We completed some reconnaissance work late last year, 44 of 64 rock chip samples and channel samples. So we didn't select the shiny ones, average 1.56% Li2O. We had 12 above 2% and 1 up to 2.62%. So we've got really high expectations that this is going to be a really great addition to our global resource when we get there. Now, this is the lepidolite style project. It's hard rock. In China, 18% of global lithium carbonate was produced from lepidolite in China. The Chinese producers are at the bottom of the cost curve, and they're getting better every year. So they started mining lepidolite several years ago. The volumes are going up, and their precision in recovering lithium is getting better and better. So us being in a low-cost environment, we expect to be able to achieve something similar. And at the end of the day, it's not about grade. It's about your cost environment and what it costs to produce the product you're trying to sell. So we're not too focused on having the highest grades in the world. We're focused on being able to deliver a low-cost product, because at the end of the day, we're here for 15 years. So it's no use having a high-cost product and suffering during the downturn in the commodity cycle. The Catatong project is 30 k's to the north. It's under application. 4 key block areas here. This is going to be targeting hard rock mineralization, but there are some geothermal fields in the block areas. They abut a lithium granite intrusion with background lithium of up to 0.27% Li2O. We treat the geothermal as an option. We're really actually looking at Lake with Lilac and Vulcan and what they're doing. And if they kick some gold, we'll get pretty excited. But just the hard rock alone provides us with a greater project. So we see this coming in behind Rio and Ket and providing more tonnes per year or a longer term project. You'll note that this is on the grid with that hydropower station too. Now onto ESG. So we've started our feasibility work. At this stage in our company's life, we focus on 3 key UN SDGs. That's quality education, gender equality, and consumption. At this point, we're trying to we're building our relationships in our community. And if we can deliver on these, we build our community spirit. And our view is that if our community thrives, we thrive. So we've got a really big community program. And the reason for this is that we'll be submitting our mining license applications on both projects late this year or very early next year. So our main focus is on education. We help schools. We help schools with books and materials, playgrounds, and so on. We focus on health. We're doing health checks. Here's a picture of an X-ray. We just ran a massive program on X-rays in our region, which is really well received by the government and our local communities. And we also work with the temples. So there's Muslims and Buddhists there. Thailand's a Buddhist country, and we work with the communities on the religious side. We get a really great reception too. So to finish off, there are 4 key points, 3 on this slide. We are the only lithium explorer developer in Southeast Asia with JORC compliant resources, and we're going to be heading downstream. Our key project, the Rio and Ket project, comprises 2 reasonably large prospects, Rio and Ket and Bangi Tum. And as our resources come through, I'm hoping we're sort of heading towards 30 million tonnes or something. I can't really say that. And 3, we're moving downstream to produce lithium cathode active material. So the lithium carbonate's a done deal. Cathode active material is where we want to get to, and we're highly confident that we'll be delivering something on that this year. And then 4 is ownership. Me, my board, the management team, our staff have shares in the company. They're committed to what they're doing. They want to see a positive outcome. There's a lot of people with skin in the game, and that's why we're going to produce a great outcome. So join us, explore a better future. I'm over at booth 45. We'd love to have you over there. There's a lot more to our project than what I've delivered on here. I can only say so much, but we invite you to come over and have a talk to us. Thank you.
Thank you, Paul. Paul's a bit of an overachiever. Look at this man up here in front of us. He is. Let me list through these things to you. I've got 20 seconds just to sing your praises. He's a political economist. He holds a master's degree in political economy, international studies, commercial law, and business administration, as well as a bachelor's degree in business.
I have a life. Actually.
It's pretty, no, it's pretty, it's all that's really, really impressive. But I think the impressive thing too is the way that you talk about where you are, your site, your genuine interest in the people that are there, and your general interest in explaining it to us as investors as well. So I love listening to you speak. So thank you so much.
Thanks.
Could you please put your hands together for him today, everyone?
Thank
Go
you.
and have a chat with him.
Thanks.
Lots more upside on that one. Thank you so much. We have one more presentation to share with you. Excuse me, I'll stand up. That's very rude of me. We have one more presentation before the break, and when that presentation is over, we'll pop up the QR code again for the quiz that we're doing, the survey that we're doing. And if you can help us out with that, that would be much appreciated. And you can do that as well while you're walking around. Once you've unlock that QR code. You can hook into it anytime you like. Now, we've got a Canada-focused explorer rounding out this session, Green Technology Metals. They've recently completed a big diamond drilling program. I think they had 35 holes, but they'll keep us up to date in a second. The results are out. Luke is their CEO. Now, he's had to record his presentation and flip it through to us early this morning. We could blame a whole heap of things, but we're going to blame Qantas this morning. So would you put your hands together? He can certainly hear us from where he is online, and let's hear what he has to say. Thank you.
Welcome to Green Technology Metals, ASX code GT1. Now let me pick you up and take you to the mineral-rich, beautiful country of Canada, where we're building a vertically integrated lithium business from exploration to mining to concentration and conversion, and delivering those chemicals into the downstream players of Ontario. Now we all know it's the team that makes the company. So we've got John Young right there in the chair, co-founded Pilbara Minerals. Then Cameron Henry founded Primero. They build lithium processing plants around the world. Pat Murphy, AMCI, they fund exploration and development projects. Rob Longley. Once we convert to a chemical, that will then go down to the EV and battery corridor, which is lined between Toronto and Detroit, where the likes of General Motors and LG are building their batteries and electric vehicles. As you can see, there's been a massive drive to create this electric revolution in North America. We have the car manufacturers, we have the battery manufacturers, we have the cathode active material manufacturers. The missing component is the raw materials and the chemicals. And that is where GT1 comes to the front. We want to be first into production and supplying these chemicals into the downstream players, completing this supply chain. To complete the lithium supply chain, we need to get chemicals into the market. We'll do this by creating two hubs. First of all, we have the Eastern Hub, which hosts Seymour. We'll get this up into production and start creating a concentrate, The concentrate will go down to Thunder Bay and be converted to a lithium chemical. Whilst this is happening, we'll start developing the Western Hub. This hosts Root. Root will create concentrate, which will then also be added to the lithium conversion facility, completing the lithium supply chain and the electric revolution. 2023 is going to be another busy year for GT1. We've still got heaps of exploration to go in the Eastern Hub. So not only is that Seymour, we've got Junior Lake, Falcon Lake, Gathering and Superb, all prime lithium real estate that we need to explore. Over on the Western Hub, we picked up a whole heap of ground to the north of Root, which we need to explore. We've still got drilling to go at Root Bay. We've still got drilling at Macomb and Morrison, all with LCT pegmatites. And then way up to the north, we've got Pennock, right near the PAC project. We need to explore that too. So as you see, we've got a lot of exploration ahead of us. Now down in Thunder Bay, where we have our office, there's a whole heap of due diligence going on for a potential converter facility. We have our project office in Toronto, where we're working on our metallurgical and feasibility studies, and also working with the government and strategic partnerships. Focusing on the Eastern Hub, we have Seymour, Northern Seymour, Falcon Lake, Junior Lake, Superb Lake, all along strike, all within the Greenstone Belt, all with known LCT pegmatites. So as you can see, there's a whole heap of exploration that will occur in 2023. Over on the Western Hub, we have our major project, Root. We've just proven up 4.5 million tonnes on a maiden resource. We've moved the rigs over to Morrison, and it looks like the pegmatites continue from Macomb to Morrison. We also put the rigs onto Root Bay. Now, Root Bay we're very excited about. Assays pending, but this is looking very promising. Over 2023, we'll be exploring to the north, the hatched area. This is all prime lithium real estate with known LCT pegmatites, spodumene bearing. Within the Root Bay area, we also have an area to the east, and we also have an area to the north. Allison Lake, Pennock, all areas that we'll be exploring in our Western Hub. One thing to remember, GT1 only listed on the Australian Stock Exchange in November 2021. We got our early exploration agreements in place with our Indigenous partners and commenced drilling in December 2021. In 2022, we completed our resource, we commenced our metallurgical test work and started our resource definition. And that's where it really places us right now. We will be delivering a preliminary economic assessment in 2023 and then moving quickly into a feasibility study. In conjunction with all this development test work, we've been working with the First Nation Indigenous groups where we work. We've completed our baseline studies. We've been doing all the geotechnical and base work required to develop an operation. These are all things that are behind the scenes work we've been completing to get Seymour and the Eastern Hub up and running. On the corporate development side, the provincial and federal governments know GT1 very well. They also know that we want to be the first lithium producer in Ontario to complete this lithium supply chain and the Made in Ontario story. The provincial government have been working very hard to get the likes of General Motors, Volkswagen, LG, Stellantis into Ontario. They are all the downstream players that we will be feeding. To do this, GT1 will also require partners. We are partnering up with the governments for various funding. We are reaching out to strategics to be part of the GT1 story. And that will be offtake partners, joint ventures, processing facilities. All of the above is currently being worked on. Right, that's the end of the presentation. Thanks for listening. Just some takeaways before you go. Share price, 60 cents. Great time to jump on board. Team, I've got a team that can execute on the ground and I've got a great board. Commodity, lithium. Lithium's got a long way to run. Location, North America. There's an EV supply chain building right now, which Green Technology Metals will feed into. Finally, resources. We have a massive resource base which is building daily. Watch this space. please swing past our booth. It's B, legs 11, legs 11. So that's B, 1111, and meet the team. Welcome to GT1.
Well done. Put your hands together. You can hear you from where he is. Thanks, Luke. Luke from Green Technology Metals. And I think it's Jacinta that's outside too. And their booth is just to the left of the door as you go out. And Ontario is a really interesting jurisdiction at the moment because they're so pro this greening technology. They've got a lot of incentives. And you heard him say that he was applying for some help from the government. And very high likelihood that they'll be getting it because they're so supportive of mining and exploring. We're going to take a break. We're going to have lunch. Lunch is half an hour. Only half an hour today. And when we come back from the break, we've got our whirlwind dating session, 10-minute presentations from our presenters. And this, remember the QR code? The question for this next session is, what will be the gold price in US terms by the end of 2023? What do you think the gold price will be in US dollars at the end of 2023? So you had the insights at the start. Let's see what you think, given everything that you've heard and what you know. Enjoy your lunch, and you'll hear Jack